Good day. Today we are going to do the projected income statement. So if you don't know what is a projected income statement, you can go to my YouTube channel and then you'll find a video there where I've explained what is a projected income statement. So actually the projected income statement, I can just say in short, it is when the business estimate its incomes and expenses. Okay, so in order for the business to prepare the projected income statement, the business will need the previous year income statement and also the balance sheet of the previous year. Okay, so in order for the business to prepare the income statement, in order for the business to prepare the projected income statement, it will need its previous year income statement and also the balance sheet. Okay, and then just like I said, you just go to that video and then you get a better explanation. Okay, and then after that, so the business will need to go to the amounts that are there in the projected income. I mean, the business will need to go to the previous year income statement and then divide all the amounts by 12 months. So the reason we do that, it is because when the business prepares the projected income statement, the business prepares the projected income statement for months. Okay, for months. So the income statement, the one that you will take for the previous year, it will be the income statement of the whole year, the one that you know. The one that you know, which is the income statement. It's the income statement of the whole year. That is why we have to divide the amounts by 12 so that you can know that how much are these amounts per month. Okay, so let's quickly go to the question. Okay, use the income statement for the year ended 30 June to prepare the projected of Makhubo traders for July, August, and September 2021. So the year ends on 30 June 2021. So we are told to prepare the projected for these 3 months, right? So we are given the income statement of the previous year. So what you will need to do right now is we have to divide these months by 12 so that we know that how much are these amounts per month. Okay. So let's go to the additional information. Letter A. Average monthly sales are expected to remain constant in July, August, and will increase by 10% in September. Now let's go to the sales. So the amount of sales here is 960,000. 960,000. So we want to know that how much are the sales per month? How much are the sales per month? So we divide by 12. So the sales, they are 80,000 per month. Okay, so then here we are told that average monthly sales are expected to remain constant in July and August. So meaning that the sales in July and August, they will be 80,000 because we know that the sales, they are 80,000 per month. After doing this calculation, we can now know that the sales, they are 80,000 per month. But then in September, we are told that will increase by 10% in September. So the sales per month, they are 80,000, but then in September, they will increase by 10%. So 80,000 times 10%, how much is this? 80,000 times 10%. So this is 8,000. So they will increase by 8,000. So 8,000 plus 80,000, that is going to give you 88,000, right? The net transaction, a fixed markup is maintained throughout the year. So the markup is the same throughout the year. Now let's go and look at this. So the first question is, how do we calculate the markup percentage? How do we calculate the markup percentage? So to calculate the markup percentage, you must say gross profit divided by cost of sales, and then we times by 100. Okay, so the gross profit is 480,000, and then the cost of sales, they are 480,000 also, times 100. So therefore, it means that the markup is 100% in this case. So the markup is 100%, right? So what we want right now is we want to calculate the cost of sales for this month. So now we know that the markup is 100%. So what do we know? We know that cost price plus markup is equal to selling price, right? So the markup is 100% right now. But then the cost price, what you know about the cost price is that the cost price every time, it must always be 100%. The cost price, it must always be 100%. So 100 plus 100, it is equal to 200. So the selling price is 200%, right? So now let's come into the calculations. Let's do the calculations. So here for July, we're going to say 80,000 multiplied by. So in this case, we are given the sales, they are 80,000. So when doing these calculations, every time below you need to put what you have. So what you have in this case is the sales, they are 80,000, and the sales, they are 200%. So below you put what you have, and then above you put what you don't have. So what you don't have right now is the cost of sales, which are 100%. So this and this, it is going to give you 40,000. So the cost of sales, they are 40,000. Okay, cost of sales 40,000. Obviously, for these two, they will be the same. And then for September, so the sales for September, they're different. So therefore, let's do their calculation. Let's do their calculation for September. So September, it is 88,000 times 100 over 200, which is going to give you 44,000. That is 44,000. So when you take this and this, it is going to give you a gross profit of 44,000. Gross profit of 40,000. 40,000. Okay. The next one. A monthly rental charge to a tenant will increase by 10% in August. Monthly rental. How much is the rent income? The rent income given here, it is 38,400. The rent income is 38,400. Let's erase this. 38,400. 38,400. So we want to know that how much is the rent per month. Remember, I said that you must divide these amounts of the previous year income statement by 12. So we have 38,400 divided by 12, which is equal to 3,200. So this means that the rent income, we know that the rent income, it falls under other operating incomes. Okay, so this means that the rent income per month, it is 38,000. But then in August, we are told that the rent income increased. The rent income increased. So let's see it. The rent income will increase by 10% in August. So right now the rent income is 3.2 per month. But then from August, it will increase by 10%. So 3.2 times 10%, that is 320. So this means that from August, the rent income is going to be 3,520. 3,520. So they did not say anything about September. So this means that the rent is going to be the same. So we only have one column for the incomes. So it means that this is the only income. So obviously it's going to be the same. 3,520. 3,520. Okay. Gross profits plus other operating incomes, that is a gross operating profit. This is a gross operating profit. So it is 43,520. Okay, then this one is 47,520. Okay, and then letter D, interest on fixed deposit will remain unchanged. So the interest on fixed deposit will not change. But here it is 3,840. The interest on fixed deposit is 3,840. So we want to know that how much is the interest on fixed deposit per month. Remember, we are doing the projected for each month. Okay, so 3,840 divided by 12. Remember, we must divide this amount by 12. So it is 320. So we are told that interest on fixed deposit. So the interest on fixed deposit is supposed to be here under operating profit as the interest income. So it falls under the interest income. So interest on fixed deposit is 320. We are told that it is going to remain unchanged. Okay. And then the firm has a mortgage of 50,000 with Zakhele Bank. The rate of interest on this mortgage is 15% per annum. 10% of this mortgage is repayable on the 1st of August. Okay. 1st of August. Remember, we are doing for the months of July, August, and September. So we are told that 10,000 will be paid on the 1st of August. Right? Now, let's go to the interest on loan. So it's given here, it is 7.5. 7.5. We want to know that how much is it per month. So 7.5 7.5 divided by 12. So it is 625. Interest expense, it is 625. This is the interest expense. Okay, the interest expense, it is 625. But then we are told that from August it is going to change. Okay, so per month it is 625. So this one is July. This one is before the change, where it is still 625 per month before the change on the 1st of August. Right? So let me erase this. Okay. So on the 1st of August, 10,000 of this mortgage will be paid. 10,000 of the mortgage will be paid. So the firm had a mortgage of 50,000. By then, on the 1st of August, 10,000 of it will be paid. So after paying that 10,000, it means that the remaining mortgage, it is going to be 40,000. So this means that now the business will be owing a mortgage of 40,000. So now we have to calculate the interest on mortgage on the different amounts now. We are going to calculate it on the different amount. Okay, so 15,000, 15%. 40,000 times 15% times. Okay, we want to know that since that now the mortgage is 40,000, how much is the interest on mortgage? So because we are calculating for August, we are going to say times 1 over 12. Remember, the 15% is the 15 per annum, 15% per annum. So because we are calculating for August, we are going to say times 1 over 12. Okay, 40,000 times 15% times 1 divided by 12. It is 500 rand. So this means that in August, the interest on the mortgage, the interest expense is going to be 500 rand. Remember the interest, remember the expense, it must be on the brackets. Okay, so they did not say anything about September. So this means that it is going to be the same. There's no change for the interest on September. Okay. Letter F. Depreciation will remain fixed for July and August. Okay, let's quickly go to the depreciation. Depreciation, it is 12,600. 12,600 depreciation divided by 12. 12.6 divided by 12, that is 1,050. So the depreciation per month, it is 1,050. And we were told that the depreciation will remain fixed for July and August. So there's no change for July and August. That is just going to be 1,050. 1,050. And then in September, the firm will purchase equipment of 48,000. It will be depreciated at 10% on cost. Okay, so 48,000 times 15%. Yeah, it's 10% times 10% times. So because we are calculating for only 1 month, remember this is 10% per annum. So because we are calculating for only 1 month, we are going to say times 1/12. So the depreciation for this new equipment, it is going to be how much in September? It is going to be 400 rand. So this means that now the depreciation is increasing by 400 rand. So in September, the depreciation is going to be for 400 plus 1050, which is going to give you 1450, right? And then letter G, advertising rates, water and electricity are expected to increase by 10% in August. Where is advertising? So advertising is 30,000. Advertising it's 30,000. Okay, we have the advertising, which is 30,000 in the income statement of the previous year. Advertising, so divide by 12, 30,000 divide by 12, it is 2,500. So the advertising per month, it is 2,500. Okay, advertising per month, it is 2,500. And we are told that they are expected to increase by 10% in August. So this means that in July, the advertising is going to be 2,500 because there is no change. There is no change in the advertising, but then the change is going to be in August here. So 2,500 times. So it is expected to increase by 10% times 10%. So 2.5 times 10%, that is 250. So this means that now the advertising is going to be 2.5 plus 250, which is equal to 2,750. So obviously the one for September is also going to be 2,750 because they did not say anything about September, meaning that the one for August and September, they are going to be the same. Okay, now the rates. They are 7,200. The rates, they are 7,200. Okay, so if the rates, they are 7,200 divided by 2, I mean 12. 7,200 divided by 12, that is 600 rand. So this means that the rates, they are 600 rand per month. The rates, they are 600 rand per month, but then in August, they are expected to increase. So this means that here in July, the rates, they are going to be 600, as we know that the rates, they are 600 per month. But then from August, they are going to increase by 10%. So 600 times 10%, that is going to be 60 Rand. So if you add the two, this means that now the rates from August, they are going to be 660 per month. They are now 660, the rate. And then the next one, it's water and electricity. Water and electricity. Water and electricity. How much are they? Water and electricity, they are 42,000 divided by 12. 42,000 divided by 12. That is 3.5. So this means that the water and electricity, they are 3,500 per month. But then we are told that they are expected to increase by 10% in August. So in July, they are going to be 3.5. But then we are told that in August, they will increase by 10%. So times 10%, that is going to be 350. So if you add these two, they will give you 3,850. So now from August, the water and electricity, they are going to be 3,850. 3,850. Okay. And then all other expenses are expected to increase by 20% in September. All other expenses, they are expected to increase by 10% in September. Let's start the first one. We have the bank charges. The bank charges, they are 21,000. Bank charges. Okay. Bank charges, they are 21,000. 21,600. 21,600 divided by 12 is equal to 1,800. So we are told that all other expenses, they are expected to increase by 20% in September. So this means that all other expenses that are here that were not affected by these adjustments, they will increase by 20%. So we know that the bank charges, they are 1.8 per month. They are 1.8. But then we are told that in September, all other expenses, they will increase by 20%. So 1.8 times 20%, 1,800 times 20%, that is going to be 360. So 1,800 plus 360, that is going to be 2,160. So from September, the bank charges per month, they are 2,160. Okay. And then another expense that was not affected is the insurance. The insurance is 21,000. So we have the insurance. It is 21,000 divided by 12. 21,000 divided by 12. it is going to be 1,750. So the insurance is 1,750 per month. But then we are told that all other expenses are expected to increase by 20% in September. So the insurance here in September must increase. So 1,750 times 10%, I mean 20%. 1,750 times 20%. That is going to be 350. So if you add the two, they are going to give you 1,750 plus 350. It is going to be 2,100. Okay. And then the next one that was not affected, it is the repairs, which are 12,000. The repairs 12,000 divided by 12, that is 1,000. Right? So repairs, they are 1,000 per month. But then we are told that in September, they're expected to increase by 20%. So we can just say that 1,000, we can also say just times 120, not this way. But you can just choose which way do you want to use. Okay, you can just say 1,000 times 120% is equal to 1,200. So if you don't get this one, you can just continue using this way that we're using here. Okay, so it's 1.2. Okay, after repairs, we have the salaries, which are 105,600. Salaries. The 105,600. 105,600 divided by 12. That is equal to 8,800. So the salaries per month, they are 8,800. 8,800. But then we are told that all other expenses, they are expected to increase by 20% in September. So times 120%. Like I said, if you don't get this one, you can just continue using this one where we were saying times 20%, and then again we add that 20%. So 8.8 times 120%, it is equal to 10,560. So the salaries in September, yeah, 10,560. 10,560. And then stationery, it is 10,600. I mean stationery, 10,800. 10,800. 10,800 divided by 12, it is equal to 900 rand. So the stationery is 900 rand per month, but then it is going to increase by 20% in September. So 900 times 120% is equal to is equal to 1080. 1080. So the remaining one, that is the wages, which are 67,800. Wages 67,800. 67,800 divided by 12. That is 5,650. The wages, they are 6,560. 6,560 per month. That is 5,650. 5,650. 5,650. 5,650. The wages per month. 5,650. And then they're expected to increase in September by 20%. So times 120%, it is going to be 6,780. It is going to be 6,780. Okay. Now let's do the calculations. Let's calculate all these expenses. So 5,650 for July plus 900 plus 8,800 plus 1,000 plus 3.5 plus 600 plus 2.5 plus 1,050. So the operating expenses, they are 27,550. So gross operating incomes minus this. So the gross operating incomes, they are 43,200. So therefore the operating profit here is 15,650, right? Plus the interest income, so 15,650 plus the interest income of 320, that is going to be 15,970 minus the interest expense of 625. So that is going to be 15,345. And then August, we're going to do the same thing in August, and then we follow the same procedure, then we get this amount. Thank you so much. Thank you.